Hello everyone, my name is Jeff Sorrells. I'm also known as Bobokus in the Forex trading world. And what we're going to go over today here in this video is a little about developing your trading plan and then acting on it in the upcoming price action. And the first thing we're going to cover here is we're going to start looking at all the previous natural support and resistance levels that the previous price action has left behind, because that's going to give us our support points and our resistance points that are ahead of the current price, whether it moves up or down. And what we're going to do, we're just going to mark these levels, and so when price does come back to that point, we know that we're either at a known support or a known resistance level. So what we're going to do is we're going to take some horizontal lines here, and we're going to start first by looking over the daily chart, and we're going to start marking these previous support and resistance points. All right, now if we go to the current price, what I like to do is I like to go back and look at the previous waveform highs here, because this is where our first points of support are going to come from. All right, so if we continue to map these out from this point below, we have a point over here. And the ones that we want to pick out are the ones that it's obvious the market left a waveform high behind that. We also have a small waveform here that we want to pay attention to. And what this is going to do is this is going to develop some support ranges or some support levels that we're going to use to trade from. Now we may not need more than 3 or 4 here. The reason is we don't want to get too far away from price, because it's not really worth it to map the other ones unless price has the ability to actually reach that far. Once we get about 500 pips away, that's probably about as far as we need to go for now. Later you can always update these. We also not want to just look at the current price action, but we want to try to scroll back here and look and see how price reacted to these levels in the previous history here. All right, now we do have some that are actually higher than what we have, so what we're going to do is we're going to come and pull these bottom ones up to these others that we have here. We do know that we have a point here, and maybe even one here. So let's scroll back over. Fairly tight looking range, but that's okay. The euro is pretty obvious that we're in an uptrend here. It's been that way pretty much the entire year of 2011. And now that we do have a few support points that are below price, okay, now we need some resistance points that are above price. Okay, where is this thing headed to? All right, we're going to go by the same procedure. All right, now for the resistance points, what I'm going to look for first are the previous waveform lows now, because now I'm looking for a resistance point, and we're going to mark these as a resistance point, and we'll use a different color, red for resistance, blue for support. Alright, we also know that if we come up a little higher from here, we're most likely going to run into some previous support, which is now resistance, if it comes that far. So let's scroll back and make sure that we've got all these points that are within this price range. Because a lot of times, if you go back in history, you'll begin to find a few more. We don't want to go back too far. We know we're going to have some once we get way up into the upper ranges here, or once we get above 1.5 anyway. All right, now in between here, we have pretty much a pretty big gap here. So what we'll do is when we go down to the 4 hour, we may find a few more in here that may stand out a little bit, and we'll try to fill in those gaps there. Alright, so now we're going to take what we see from the daily chart, and we're going to go into our 4 hour chart. And first, we'll make sure that we match it up to, the levels that we see that are immediate to this. And since we're drawing these from a 4 hour chart, we'll make these a little less significant than we do those that we find on the daily chart. But we'll use the same colors. Blue for support, red for resistance. Blue are your buying points, red are your selling points. And let's just scroll back and see what we have. And see how price matches up to these previous points here. All right, now we're also going to have a little bit here, but this is actually, the current price is this magenta line here. So we want the points that are below this. This weekly high looks like a pretty good point. The daily level is matching up with those well enough. That's probably good enough for now as far as the amount of support points that we have below price. If it were to dip further down, we do have some points here. But again, these are slightly weaker than what you're going to find with, your daily levels. But we also have some that are above price here that are going to be resistance because they are above it here. If I could get my mouse to work correctly here. Just scroll back a little more. We really don't have a whole lot, and we may have a pretty big gap here as far as once the market gets above the 46.75 level or so. And we may see it cover that gap pretty quickly if that happens. Right now those look pretty good. It's been a while since we've been back at these ranges here. Now we have our 4-hour resistance, daily support, and 4-hour support points. Now we're going to zoom in a little bit here. Now the next thing we're going to look at is since we know that the euro has been trending up, they recently raised rates, which is going to continue to draw interest to, or draw a lot of trading interest to the euro, just from the fact that there is a more of a positive offset in interest rates now. But what we want to do next is we're going to look at the path that this is taking here. All right, and we're going to do that by creating a channel that the price has been following here. We're not going to get too far away from it. We'll look at this from the daily chart first, and then if we have to, we'll zoom in a little bit closer here. But we want to look at just the recent price action and this, the last leg of this where it's been moving up. Now what we can do is we can draw a bottom to this, and again we'll use the same type of color scheme, blue for, well, let's see how this looks here if we can tell all of it, and we may come down a little bit, but we'll see here. And from this point, the current high, you see somewhat of a wedge forming here. This is the path that the euro has embarked upon here. Top being the selling point, the bottom being the buying point. Now what I like to do to add validity to this price channel that you want to draw, or that you can put on here, is I like to come in and I like to put a center line across this. And if I see price reacting to this center line, I know that the channel that I'm using is most likely a fairly good channel here. We'll offset the color here just to represent this. And what I want to see is price reacting to the center of this, and either some type of support and resistance. Does it become the balance point between hitting the top and hitting the bottom here? And this may be a little bit far off since we're looking at quite a bit of price action here, so let's come up a little bit. And we still pretty much have the same thing, but we'll have to adjust our center line to this a little. And then we'll go to our next level down, and we'll look to see how does this look based on the current price action. We may be a little bit high here. And again, the thing is, most people want to be symmetrical with this, but the market really doesn't work that way, so you pretty much have to go with what it's showing you here. And I want to try to just center this center line up with my upper range and my lower range of this. And for the most part, it will come out pretty close to being centered in the upper and lower range of this. And there we have it. So, all right, now as the market comes down to this, we can just about expect to see the same type of reaction we do every time it comes to the center of this. It's either going to break and continue, or it's going to bounce from this point. Because we want to kind of help this kind of helps us determine, where do we see intersections at with these natural support and resistance levels. And that kind of adds a little bit of weight to where, this may point to where more orders in the market are going to be placed. Because that's basically what we're trying to do, is gauge where the orders are going to be at the market for people to be buying into it or to be selling at it, because we want to get in and out at those same points. Just need to neaten it up a little bit here. And remember, you're not trying to be pit perfect. You're just trying to point out the points in the market to where the best buying opportunities are going to come from, or the best selling opportunities. And since we know that the euro is trending up, we're looking for buying opportunities, especially after we've had quite a bit of movement here over the course of this previous week. So now the question is, how much do we retrace? well, we're going to retrace into these support points, and the stronger this is trending, the less is probably going to retrace. So we're going to go to the first points here, and this really becomes our point of interest now, and this is where building up our trading plan comes into. All right, now if the market were to continue to retrace into this, this becomes our little area of interest here, where we're going to be looking to buy at this. Anywhere between 45 all the way down to maybe even 44.75 or so. And that's pretty much going to get us into the meat of this top of this range from the previous week back here. Okay, now we're going to go one step further, all right? Because everybody knows me basically from my use of Fibonacci and the way that we use it. Well, now that we have all of the natural support and resistance levels, mapped out here, the path that price is taking, all right, now let's add some Fibonacci to this and see if we get any confluence here. All right, well, we're a little bit high if this were to make a shallow retracement. And this is where the individual decision has to come from each trader. Do I want to try to buy this from a shallow retracement, or do I want to wait for it to actually make at least a 38.2 retracement here? And if I wait for it to make a 38.2 retracement, or here, where do I put my stop loss if I were to put a limit order ahead of price here? Now, the way I like to select my stop loss after I've established at what point in the markets that I do want to get into this at, I like to look at the previous price action here. All right, I'm going to look at the previous waveform lows, because a re-break of one of these lows is a pretty good sign that the market is turned into a breakout in the opposite direction. And I don't want to be long if we were to break out these previous waveform lows here, which also happens to be a weekly low at this point. So what we're looking at, let's look at how much stop loss we're going to have to go with here in order to be ahead of the market. Roughly 130 pips. All right, now let's look at the possible targets of this. All right, now a bounce off of the 38.2 or even a shallow retracement here, because even if the market comes up and breaks this current swing high and low that we have on the 4-hour chart, or the weekly high and low, the targeting is still going to be the same. And, we've been looking for this to go for 48 here, for a couple of weeks now, but actually, this week kind of slowed things up a little bit, or I would expect we'd probably be a lot higher than we are now. But there's been a lot of fundamental issues within the the EU, and it's kind of slowed down the progress here a little bit. But for targeting, we're always going to use this target range anywhere from the 138 extension, which is T1, or the 161 extension, which is T2, and you'll hear us refer to that quite a bit here. So we know that we have a potential target if we were to enter, say, the bottom of this little buying range here as soon as we get into the tops of this support, which used to be resistance. We're looking at roughly 325 pips or so as a closed out trade. All right, now if we go back to where we had our stop, we're roughly risking 130 for about 325. Or about a risk-reward ratio of somewhere around 2.5 to 1, which is good, but I would like to play it a little tighter, because I would like to see this dip down even further, come in with a much smaller risk for the same type of target. So to me, I would rather see this retrace deeper, at least down to the 44.50 range, and then put my order somewhere around the 44.50 range with that same amount of stop loss. Roughly 100 pip stop loss, but now for more like 365 pips or so as a target point. So the more it does retrace without breaking these support points, the better your risk to reward ratio can be, because you're basically looking at the same points of previous support to use as a stop loss. So thus your trading plan now becomes to buy the dip. Strong bullish price action in an uptrend. If the market retraces, you look for a point to buy it. So you actually have two choices here. Do you want to try to get in early, or do you want to wait and see the market retrace deeper a little bit here and actually get in at a much better price, somewhere around the 44.50 range? We just stop back below these points here, targeting the 48 to 48.25 range, which would also be a break there would tell us that the market, this uptrend, is actually gaining more momentum by breaking this upper trend line here that we have in the background. All right, now the flip side of this is, okay, some people say, well, I think the euro is made its top already, and you're going to have that. You're going to have people who are going to want to trade this in the opposite direction, which is fine. I mean, that's just the way the market works. And to them, now their plan would be to, if we do get a shallow retracement, then we're looking at selling at one of these points here. Now we may not have a time to go over that, but it would be the exact reverse of what we just did to determine our buying point here with our stop loss here. The same as if you were going to come up here and sell somewhere in here with your stop loss above this point, or maybe even one of the further points that are back in history, and sell back into these support points here. So trading is more about, coming up with the trading plan, with your trading plan, and just following through with it. But to me, you always want to trade for the continuation first, and that's why I say it would be better to be looking for a long entry with the euro as long as it continues to trend up like this, and continue to show bullish price action. We're going to keep playing on that. We're going to keep buying it, buy it as it dips, close it as it hits, either the previous resistance points or your, that target that you're looking for. It's pretty much how you come up with your trading plan. Buy the dip, you have your prices established, your stop loss point established, and your actual target point. Now, if you don't get the price action you're looking for, sometimes you just simply don't trade. Because sometimes you're going to get things like this in the market where there's a lot of indecision here. And that's going to happen. So, the point is, if you don't get what you're looking for, just simply don't trade. Wait for, the pair you're trading to actually show its hand again, and then you can go back to trading it. You don't have to be in a trade every single day. Sometimes you have to have, a little bit of patience. You have to wait for the market to come to you and to your trading plan, or you just skip it and move on to another pair that is actually falling into your trading plan. So to me, my trading plan is I have two choices here. I can either go look for the shallow retracement into this range here, where it gets into these highs, or simply wait for it to actually come into the 38.2 here. But also have to keep in mind, we do have the center line of this trend this uptrend price action that we've been following here, and it's pretty much staying with this for quite an extended period of time here. The first choice is to take the shallow retracement at a smaller lot size because of the increased amount of stop loss we have to use, or simply wait for price to come into the 38.2 range of this overall movement from last week with the same amount of stop loss but at a higher lot size, but both for the same target. You just have to make your choice depending on the price action we get once this week opens up. So there you have it, developing a trading plan and then waiting for it to happen and then following through with it. And if you would like to learn more or see even more of this and how we do that, because we do this pretty much every day in our live trading room. So until then, I hope you enjoyed this. Good luck in your trading, and pay attention just to see how this unfolds here going into this next week. So I wish everyone good luck in their trading, and until the next time, goodbye.